After another tumultuous week in the market, investors are left with more questions than answers. Keep watching as we try to answer some of those questions that you may have and also go into what happened last week that caused the market sell-off.
Heavy selling in the markets last week led to the S&P 500 and the Dow Jones both down about 4.5%. The Russell was down almost 5.5% and is now down over 5.6% year to date. The S&P 500 and the Dow are now also negative for the year, and the NASDAQ is the only U.S. index that is still positive for 2018. Now, I also want to mention this is the second time in the past 3 weeks that the markets have been down over 3%. Foreign stocks were down about 2.2% last week, and emerging market stocks were down over 1.3%. Now, both of those international indexes are both down over 10% year to date. The chart that we're looking at today is of the yield curve, and more importantly, I want to talk about this now being an inverted yield curve, which you can see to the far right of the chart. Now, normally, a 5-year Treasury note would have a higher yield than a 3-year Treasury note. But what happened on last Monday is this flipped. And now we have a 3-year Treasury yield that's higher than the 5-year. And next, I want to talk about why this is important. The inverted yield curve is important because it can be one of the leading indicators of an economic recession. Now, 4 of the last 5 times the yield curve is inverted, which includes 2005 into 2006, the year 2000, 1988, and also 1978, has actually foreshadowed an economic recession. Now, this doesn't happen overnight, but if history repeats itself, we could see an economic slowdown in the next 18 to 24 months.
So all of the news from last weekend seemed very positive for the markets going into this week. But as we said, there were rumors under the surface that the negotiations between China and the United States at the G20 summit didn't go as well as was reported. And on Tuesday, President Trump tweeted out that he loves tariffs, and he called himself the tariff man. And from that point on, we've seen a sharp sell-off in the markets. And to add to the tensions between the United States and China, the United States extradited the CFO of Huawei from Canada. And they are charging her with having a shell company that has been supplying goods to Iran. And also that Huawei has been misleading U.S. bank investors. And lastly, foreign markets continued their sell-off last week and now are down 11% for the year. And with the Yellow Vest protests turning into riots over the weekend in France, we can expect to see increased volatility in that market because France is a major portion of it. Not to continue piling on the bad news for foreign markets, but news from Brexit came out over the weekend about the upcoming vote, and all signs are pointing towards the vote being delayed or possibly not even happening.
Now, not all the bad news has just been overseas, as the U.S. market is having some issues of their own. The sell-off last week left us down close to the October lows, and if we break down below those lows, it could spell trouble for the U.S. markets for the foreseeable future.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share a video. Thanks.